name is Barry Wood. I'm the Assessment Division Director, and this is a unique presentation in that it's both the Assessment Division and the Budget Division doing a co-presentation, much like the assessors and the auditors work together. The Budget Division and the Assessment Division works together. So I'll let the other two individuals in the room introduce themselves real quick.
I'm Anna Cooley. I am the budget director here at the DLGF. And with me from the budget side of things is...
And I am Sam Vanderveen, budget specialist at the DLGF.
And so thank you for joining us. So before we get started with our presentation, we do offer this disclaimer, and that this presentation and other Department of Local Government Finance materials are not a substitute for the law. The following is not legal or financial advice, just an informative presentation. The Indiana Code always governs. So here's a quick picture of our smiling faces. So you put faces and names together. The agenda today, we're going to we'll do the introduction, what we've just gone through. Assessment 101, gross assessed values, precursors to the annual net assessed value process, CNAV preliminary review and reports for the auditors, the CNAV submission review for the department, and then hopefully we have time at the end to answer any questions we may have. So in terms of the property tax billing cycle, it's sort of like a relay race. And so if you look at the pattern we have, you go to the top where you see the ratio study is submitted by March 1st. And then that leads into the assessed values being rolled and balanced by the assessor by July 1st. A month later, on August 1st, the auditors certify their net assessed values to the DLGF. That leads then to budget adoption by November 1st by the local units of government. That then turns into the budget certification by our office by either December 31st or January 15th. That ultimately results in the property tax bills being mailed by April 15th, and the property tax bills are due both May 10th and November 10th. In terms of the assessment for gross and net AVs, you can see there's different components of each one. So for example, with gross assessed values, we have the mass appraisal or assessment process. That encompasses the annual adjustment process, also the cyclical reassessment process, and personal property. In terms of the assessor rolling and balancing with the auditor's office, there are several different steps or things that take place, including applying deductions, verifying exemptions, updating abatement amounts, and then also if there are any annexations. For TIF neutralization, you can see there's a couple other components with that. One is reporting new allocation areas, the TIF pass-through for TIF excess AVs, the TIF neutralization worksheet submission, and then confirming the TIF neutralization factor. And then finally, with the certification of net assessed values, you can see there are 4 different steps that we'll walk through during the presentations. So in terms of the assessment side, for those of you that are experienced assessment officials, you can go get a cup of coffee or take a breather for a minute or two. We'll talk about the assessment side of things. If you're not an assessment official and you may not be familiar with the assessment process, hopefully this information will fill in the blanks or make you learn a little bit more about the assessment process. So the first thing to take into mind or into consideration is that this is done on a mass assessment or a mass appraisal process. So this is not looking at an individual's property, although certainly the individual's assessment is done and the individual has the right to file an appeal if they disagree with their assessment. But the assessing official is doing this on a mass basis, be it on a township assessor or on a county assessor's basis. The assessor looks at the properties and they look at the properties based on the areas or neighborhood delineations. And that's a subjective determination by the assessing official. In some areas, say if it's a rural area, an entire township could be a neighborhood or an area. but the assessor is looking at the properties and looking to see if there are similar or comparable properties based on the age, grade, and condition of the property. So typically, if you think of a subdivision, for example, where houses were built about the same time, usually by the same builder or another builder, that's typically what the assessor is going to be looking at in terms of the assessment process when they do the assessment of those properties. Part of all this is occurs each year is the annual adjustment or the trending process. And this is where the assessor will take the sales data from the prior year, the prior calendar year, and they will determine if the assessed values either increase, decrease, or stay the same. So, for example, January 1st is the assessment date. And for the January 1st, 2025 assessment date, the assessing official would have used sales from calendar year 2024 to make a determination if those values need to change. And certainly with the way the real estate market has been going since the pandemic, most, but not all properties have been seeing a change in their assessed value over the past few years. But there are some properties that maybe didn't change. So in terms of the role that the department plays, our role is primarily that of an oversight agency. If an individual, a taxpayer, had a question about their assessment, their property tax assessment, they would contact their local assessing official. The local assessing official is using our rules, our guidelines, any guidance that we put out to do the job. But ultimately, at the end of the day, the local assessing official is responsible for the assessment of properties in their jurisdiction. As part of the assessment process, the assessor will submit to us statutorily by March 1st a ratio study. And a ratio study is basically a comparison of the assessed values with the sales of those types of properties in their jurisdiction. And this is submitted on an annual basis. In our office, we review and approve the ratio studies. There are certain statistical parameters that the ratio study, the assessor must meet. Those statistical parameters are set by the International Association of Assessing Officers, the IAAO, and those standards are incorporated by reference into our administrative rule. But this is designed to ensure that assessments, at least on a mass assessment basis, are done fairly and equitably. Once the tests are passed, then the county is approved to proceed with their assessment notification. And one of the things that they do is the assessor will send out notices of assessment by April 30th, and we'll touch on that in a minute. But the assessors are in the relay race, so to speak. The assessor is sort of the leadoff leg of the assessment to tax billing process, and so it's imperative that the assessor get their work done on a timely basis. The DLGF is also responsible for assessing different types of properties, primarily utility or state distributable property, and that would be property, say, owned by a utility that crosses into different township or county boundaries. So we're responsible for state distributable property, railroads, rail cars, and we're also responsible for assessing the large industrial facilities in the northwest part of the state. Property used to be assessed once every 10 years, and that led to a lot of issues or problems because in between that 10-year period, the assessed values could have increased significantly. And so if you think of, if we were still on a 10-year cycle, if you think of your property, what would be the difference between your assessed value 10 years ago, say 2015, compared to 2025? So back in 2002, the state switched to doing reassessments on a more frequently done basis. And in this case, it's a cyclical reassessment. And a reassessment the term scares a lot of people, but really, well, what it entails is the assessor going out and verifying all the underlying parcel characteristics for a property. So if the assessor came out and they noticed that you had a pole barn and they did not have that on their records, they'd pick up that pole barn and you'd be assessed for it. Conversely, if you had a pole barn and you tore it down, then they would take that off the records. So they're just trying to make sure that the parcel information is as accurate as up to date as possible. And that could also include, say you put an addition onto your house or something like that. So instead of this being done, the reassessment being done over a 2-year period, it's done now on a 4-year cyclical basis, so that at least 25% of the properties in a jurisdiction are reassessed each year, so that at the end of the 4-year cycle, every property has been reassessed. And this has helped the assessor in terms of their workload, budgets, in terms of getting out and being able to get the work done. So it's made it pretty, I don't want to say easier, but it's made it better for the assessing official in terms of getting their work completed. If a property is not assessed or reassessed, it still is assessed each year, and that's part of the annual adjustment process where the assessor is looking at sales of comparable properties, like I mentioned before. We get a question frequently in terms of taxpayers saying, how do I know if my assessment's correct? And one of the ways to do that is to ask the taxpayer, would you sell your property for what it's assessed at? And if a person said, yeah, that sounds pretty reasonable, then chances are their assessment is probably pretty correct. If they say, write me a check, I'll sell it to you right now and walk away, then maybe that assessment's too high, and the taxpayer may want to consider filing a tax appeal. If the taxpayer says there's no way in heck I'd sell that property for that amount, it's way too low, then chances are the assessment's too low, and they may want to just be done and move on, so to speak. So I mentioned January 1st is the assessment date, and the assessor is using values or sales from the prior calendar year to determine the assessed value. As I mentioned a minute ago about the assessor sending out notices, those statutorily must be sent out by April 30th. And that then gives the taxpayer until June 15th to file an appeal. For 2025, since June 15th is on a Sunday, the appeal deadline is on Monday, June 16th. If an assessor does not send out their notices by April 30th, even at say May 1st, the appeal deadline is extended by a year. So if a taxpayer did not get a notice of assessment that was sent by April 30th, then that appeal deadline would be, say, June 15th of 2026. As part of the assessment tax billing process, then once the assessor has sent out their notices of assessment, on or before statutorily July 1st, the assessor must roll and balance the gross assessed values with the auditor's office. And then as the auditor has 1 month to apply all the deductions and exemptions, and then certify their net assessed values to our office via Gateway by August 1st. So that's how we got to the net assessed values. But before that, let's talk about gross assessed values. And what are gross assessed values? So this is basically the records the assessor provides to the county, and it contains all the information about the real and personal property throughout the county. And this is transferred electronically. So you're not taking a ledger book or anything like that. It's done electronically. So welcome to the 21st century. The assessor keeps the reassessment data and records necessary, and then they make changes depending on the use of the property. Say office building changes or whatever the case may be, those changes are made, updates are made by the assessor's office. The auditor will take that information, the assessed value information, and then apply any exemptions or deductions. So if a owner-occupied house has the homestead deduction, the auditor will apply the the homestead deduction to that property. But there may be other deductions that the taxpayer is eligible or entitled to, say this over 65 deduction, veterans, blind and disabled, whatever the case may be. The same holds true if there are any exemptions. If a property is partially or fully exempt for property tax payments, say if it's a church or not-for-profit, the auditor will apply the exemption information against that gross assessed value. The auditor makes the adjustments and then they certify the net assessed values to our office. And then the local budgeting process begins, and I'll turn it over to Anna.
Who will be turning it over to Sam to begin with.
Tag, you're up. Sam, you're up.
All right. Well, thank you, Barry. So Barry gave us a detailed description on the mass appraisal process, ratio studies, and annual adjustments, right? And that really speaks to the provision of gross assessed values, and more specifically to the first steps within that cyclical model of the property tax billing cycle. And so having defined gross AVs, and even in those last few slides, Barry touching on the application of local property tax deductions, be it standard homestead or supplemental homestead, blind and disabled deductions over 65, et cetera. The application of those deductions on gross assessed values is how we arrive at net assessed values. And in the simplest sense, that's what we can think of it as. And that is particularly relevant, the net assessed value that is particularly relevant and integral to a political subdivision's budgeting process and ultimately the setting of a political subdivision's tax rate. And so in the next couple slides, we'll talk a little bit about the statutory processes for certifying those net assessed values and really dive into the meat of that. All right. So we've defined net assessed value. The certificate of net assessed value is essentially the same thing. But it is the annual process in which the county auditor will submit net assessed value data to the department by August 1st. And just to reiterate, that CNAV and ultimately the tip adjusted net assessed value in almost every case, that is the cornerstone of a political subdivision's annual budgeting process and the setting of their property tax rates in which property tax revenue is generated and based upon. In essence, CNAV represents a quote unquote snapshot. So we like to say a snapshot of the tax base at that point in time. And I want to hone in on that idea of it as a snapshot of the tax base at that point in time. Within a given calendar year and even across multiple calendar years, the tax base of a political subdivision is going to change. To Barry's point, annual adjustments and trending, new deductions or deductions changing, units tax base is going to change each and every year, right? And so that's the idea of CNAV being a snapshot at that point in time of August 1st, and the fact that it's going to change across years and even within the same year, depending on correction of errors or appeals, right? But ultimately, it's that net assessed value that is quite literally mathematically the denominator in the tax rate calculation when the department determines those during budget certification. And so just to hone in on that point, right, just want to stress that CNAV data and that tax base, again, it's going to change every year. In the department, we use the county certification of AV to set local taxing unit rates. But the modifications of the tax base will continue to occur from the time of CNAV certification all the way through the tax bill generation. For instance, it could be attributable to, and year-over-year changes from one year to the next could be attributable to base values, like the ag land base rate changing for the Jan 1, 2025 assessment date compared to the 2024 assessment date. Changes in a unit's tax base could be attributable to legislative changes or even concentrated changes at the local level, be it the loss or the gain of new taxpayers or a county or municipal body providing for an abatement or a new TIF allocation area. So all of those things, right, those are going to result in an ever evolving and ever changing tax base from year to year. Right. And so with that in mind, I'm going to hand it over to Anna, who's going to touch on the precursors to annual CNAV submission, and how local taxing units can work in a collaborative effort to streamline that process.
Sam has hit it right on the head when it comes to talking about a collaborative process. The precursors to the actual CNAV process are extremely important and are often really a testament to how auditors and underlying units can work together to create a successful net assessed value submission. One of the first things that we want to hit on here is the annexation. Now, the department will collect annexations in two different phases. The first phase is those ordinances that an underlying unit like a city or a town will need to submit to their auditor in order for the auditor to know how to respond to our second request for information regarding the annexations later in the year. So the first step is the collection of the ordinances that must be to the county auditor at it by a certain point in time, so that the auditor can then make sure that they've got those annexations ready for the next CNAV. Then the department, the DLGF, will be sending out a PDF to the county auditors in or around the time of that assessor rule that we heard about earlier. So around July 1st, the department will request that the auditors begin to submit their values that are involved with those annexations that were identified by the collection of those ordinances. So we've got two phases, both very important, and one informs the other. It is beneficial that cities and towns that are considering even doing an annexation work with the auditor's office, talk to the auditor's office about timing and the various processes that might need to be done in order to have the annexation information accurately represented in the tax base. So if you're going to do one, it can be very valuable to have communication well ahead of the process, because it can and will lead to a more successful and timely CNAV submission. Missed annexations have occurred in recent years, and they tend to lead to issues for both cities, towns, and the county and the CNAV as an overall submission. Within annexations, there are two annexations or subtypes that I want to touch on that have been particularly challenging that we have noticed in the past few years. One of them is the phase-in annexation. So for this one, it is a special type of annexation where if a city or a town is planning on doing this type of annexation, you will make sure that the auditor's office is aware that it's going to be a phase-in, so that they may in turn let the department know. Phase-in annexations require a very special step in the annual abstract process. The annual abstract is what basically generates those tax bills. So we have to make sure that the phase-ins are being done correctly, because we want your tax bills to be correct. So we need to make sure that those phase-ins are reported correctly, not only to the auditor, but so that the auditor can alert the department so that the abstract can be done the right way. We have to do a special step at the department level for phase-in annexations. Phase-in annexations are usually a 4-year process. You can see the graduated stepping there, with the 4th year being 100% effective. So the municipal rate is phased in. Now, the second type that also requires an extra bit of attention would be the municipal tax exempt annexation, or as we tend to call it, the MTE. And it's also important to let your county know if your unit is going to be doing one of these. While it does not require a phase-in with the abstract, they do require a different type of special attention to make sure that these MTEs are set up and connected the correct way in the step of CNAV we refer to most often as step 2. It is the second step, but it is the underlying districts 2 units. If an MTE is not notated and a county auditor doesn't know that an MTE is going to be an MTE, they may not do every connection the right way, which could lead to incorrect tax bills, billing, all of that. So a city or a town will hopefully be able to tell the county auditor's office how an MTE should be set up. Is this involved? Is this involved? Is this involved? And this is involved. So make sure that if you're planning an NTE, you can communicate how that NTE should be set up to your county auditor. We touch on these because we have seen actual verifiable issues created by annexation, miscommunication, lack of communication altogether. And it's been problematic, to say the least, in terms of successful and accurate CNAVs. So the reason why an underlying city or town will want to make sure that they communicate these annexations to the auditor's office correctly is because everybody wants their correct AV base. So if you don't correctly or get your information to the auditor's office on time, you may have an incorrect AV base for an assessment year due to an auditor not receiving the paperwork timely. Also, if you are going to do an annexation, you'll probably want your correct maximum levy adjustment. An auditor, in order to be able to report the annexation, will need to have that information so that the department will know what to do when we work the budgets. And finally, MTEs need to be set up correctly, because if they are not, an auditor will not know that it is to be so, and the underlying value would still be incorrect. Sometimes these ordinances can be a little bit unclear. So if you know that there's going to be a phase-in or MTE, let the county know. So we talked about issues, and here is a little bit more to emphasize the point. The annexation issues, some of them led to some of these 19 counties having to recertify the CNAV. And that's a whole process that we'll touch on in a few slides, but that's about 20% of all counties had to recertify the CNAV for issues that could have been avoided if communication had been a little bit better. Sometimes these delays and recertified CNAVs then cause a county and a county auditor to have budgeting issues, and then of course delayed 1782s, which then could affect a unit's ability to review that 1782 and get back with their field rep any changes they might need or want or have to do. So these are some very real life experiences that we have gone through. I know some of you might have heard of this. So these are not hypotheticals, these are realities. Another contributing factor to some of those recertifications were related to the TIF pass-through letters that need to come from the RDCs or redevelopment commissions each year. These are the documents that identify any excess AV that will be passed through to underlying units. They are due to the county auditor on or before June 15th of each year. So the RDCs may partner with a city or a town or a county itself to get these letters done, but they need to be to the auditor, because the auditor must then submit every single one of those to the department via Gateway. And you can see this code citation there. These are very important to the CNAV process because we need to be able to see if there is pass-through or not definitively right from the RDC. So that helps auditors. It also helps the department to ensure that pass-through is being handled correctly. Much like with the annexations, the communication between a city and or town with the redevelopment commissions involved and the county auditor is helpful to the CNAV process. We have definitely noticed that some of those redevelopment commission letters have not made it to the auditor, either late or not at all. And there is, again, a non-hypothetical situation where a county had to recertify because the commission did not alert the county auditor properly to an AV release of approximately 330 million. So as you can imagine, that is not a small amount of money that was in the mix there, and that AV that was not notated one way or the other. So in this case, the county found out that the redevelopment commission wanted to pass through this, so they recertified so that the AVs would be where they were more expected by some of these underlying units, but that of course slowed everything down. Another part that's very similar to the TIF pass-through is the actual TIF neutralization process itself. This, of course, is very important, and it needs to be done before the rest of the CNAV can be done. We did launch a new application last year in Gateway, and it was rather successful. We had some hiccups. We're trying to make sure that it works well, but it's an important thing to use because each neutralization area, each allocation area in each county must be completed before a county can proceed to the certified net assessed value. So we cannot unlock the CNAV for a county auditor until every TIF neutralization worksheet is approved. County auditors will either prepare or have prepared these worksheets for each of those allocation areas. So this is where we can hone in on how underlying units and redevelopment commissions can really assist with this, because in some places, redevelopment commissions that are not part of the county and are with a city or a town will do their own neutralizations, but they sometimes lag in getting them to the auditor, so the auditor cannot review them, check them, get them on our application so that we can then approve them. So it's really helpful if cities, towns, and the redevelopment commissions that they work with, and sometimes even redevelopment commissions that work with the counties, have the documentation to the county auditor in a very timely manner to prevent those CNAV delays. So again, that could include the pass-through letters. It could be the worksheets themselves. If you can get those to the auditor faster, the CNAV can go faster. Just as a note, personal property is not part of the TIF neutralization process. We will, of course, review and approve those TIF neutralization worksheets. And then once that's done, the auditor of each county will take those factors, those neutralization factors, and put them in their tax and billing software to ensure that the TIFs and the underlying units are getting their proper distributions. So one note here for sure is to note that the last day for TIF submissions is August 1st, but the last day to timely submit the CNAV, the statutory deadline, is also August 1st. So while you might think, oh, I have until August 1st, do not use October, August 1st. You think you have that long for your TIF neutralizations, but your auditor then has to turn around, neutralize, do all of that, and then still submit the CNAV on the same day. So we encourage, advise, what have you, to submit TIF neutralization ahead of the deadline. So those are some of the precursor steps. Now we'll talk about the public facing side of Gateway and how you can see some of this information in action.
All right, well, perfect. Thank you, Anna. So Anna, she outlined and touched on the prerequisites of CNAV certification, be it annexation values, TIF pass-through, and notice of excess increment pass-through, TIF neutralization, right? All these components, all these prerequisites, really, again, they speak to and cement our understanding of the CNAV, the certification of net assessed value process, as a very collaborative and should be proactive effort, not just between county assessors and county auditors, but also between local taxing units and municipalities, redevelopment commissions, et cetera, because each entity has an obligation to provide specific data as a prerequisite to that eventual CNAV, to that certification. And again, just to drive home the point, given that this net assessed value information, that TIF adjusted net assessed value, in most cases is what is used to determine local taxing unit rates, that's why it's essential that every taxing unit be thoroughly engaged in the process. And so with that in mind, the next couple of slides, we're going to look at the public-facing output of the net assessed value data that's submitted within Gateway to the department. And we'll touch on how we can access those and really utilize that data. All right. So in order to find the public-facing reports and net assessed value information on the department's website or on Gateway, again, you'll travel to Gateway, and then under report search, there will be a specific section titled Assess Value. And one thing I want to drive home the point of is, and to Anna's point earlier, when a county submits CNAV data, it is immediately published on the public side of Gateway. And so any local taxing unit or official can access both current year and historical net assessed value information on Gateway under this report search and assess value function. Right, so within these, within the assessed value application, there are 3 reports that are available for your reviewing. We'll start with actually the last one listed there. It's the shortest of the 3 and maybe not as pertinent as the first 2. But the CNAV submission log, that can be utilized to gauge and see when current year data is being submitted by the county auditor. And again, just to reiterate, that statutory deadline for the certification is August 1st. Now, those first 2, the certification of assessed values by taxing district, that's what we refer to as step 1. And that is, as we'll see here in the next couple of slides, that's I would say, the more comprehensive report of the 2, but it is not organized by taxing unit or fund. And then we'll touch on the second one of that, which is the step 3 report. So within step 1, this report, like I said, it's the more comprehensive of the 2, and it's organized by taxing district, which we can think of as a geographic area in which each taxing district is going to be tied to a specific taxing unit's tax base. Here within the step 1 report, both real and personal property is organized and even split down at the granular 1%, 2%, and 3% bucket levels. Within the step 1 report, all the real property is aggregated at the real total. Same thing with state and local personal property being aggregated in the total personal property net assessed value. And then also within the step 1 report, for any parcel or any net assessed value that's been earmarked as TIF increment, that those have standalone columns, as those will be excluded from the net assessed value and subtracted out to determine a taxing unit's TIF adjusted net assessed value. Also within the step 1 report is a column specific for AV withholding, as county auditors are authorized to withhold up to 2% of a taxing district's net assessed value, with few exceptions. And then ultimately, to a couple points that Anna made earlier about the prerequisite steps to CNAV, those last 2 columns are concern AV TIF released if a municipal or county redevelopment commission has elected to pass through TIF increment for a specific allocation area, or in the event that a municipality has an annexation effective for the applicable CNAV here, then that value will be reflected there. But again, the 3rd column from the right, that TIF adjusted net assessed value, it's displayed at the taxing district level, but ultimately it is those figures, that total there, that's going to be used in conjunction with other taxing districts' TIF adjusted net assessed values to form each unit and fund's tax base. All right, and so that's exactly what step 3 does. Perfect segue here. Step 3, this report really, and I would say for the most part, this is what most local officials and taxing units will use each and every year to check their net assessed values. But step 3 translates the data, that those TIF adjusted net assessed values that were reported on the step 1, and aggregates that at the individual unit and fund level. And so we'll see in the following slide that in the case of French Township, we know that by just looking at their general fund, right, the tax base for that fund spans 2 taxing districts, taxing district 3 and taxing district 4. And there we can see the respective TIF adjusted net assessed values associated with each taxing district, which again is aggregating all parcel level data within those geographic areas. And so we know, looking at this report, right, that the tax base associated with French Township's general fund is 93 million. And that's due to summing the values together from both taxing district 3 and taxing district 4. All right, so those 2 reports taken together, those are available for public viewing. And we would strongly encourage local taxing units to frequently visit those reports throughout the certification timeline. just to make sure that you're reviewing any changes, or if you're a municipality and you're believe that an annexation should be applied to an applicable taxing district, double checking to make sure that those things look accurate. To echo an earlier point, however, right, as Anna said, and I said a couple seconds ago, the CNAV reports, those become public immediately upon certification, right? And so pursuant to Indiana Code 6-1.1-17-1, the county auditor may elect to amend their certification of net assessed values by a couple specific timeframes here. By the later of September 1, as that's 30 days past the original certification deadline of August 1st, right? By the later of September 1, or 15 days after the original submission of net assessed values, or when the department notifies the county auditor of an error in which in the original CNAV data submission, and the county auditor and the county then elects to amend their CNAV. And again, that is a local decision. But an important note, that second bullet point, when the department notifies the county auditor of an error in the original CNAV submission, that was added in this most recent legislative session and is effective July 1st. So, and then the last two components on that, in the event that a county auditor elects to amend their CNAV, they must hold a public hearing and provide notice under Indiana Code 5-3-1. And so just to summarize all these components, last year we had 19 recertifications. Almost 20% of counties did have to recertify their net assessed values for one reason or another. But again, this gets to the point of why it's so important that local taxing units and officials review that AV information on the public side of Gateway, right? Because again, they set the property tax rates, quite literally the denominator of the tax rate calculation for each political subdivision. So, all right. So that speaks to local taxing unit collaboration and review of the values itself. But now we are going to dive into the department's role in facilitating that data submission. We've said it a couple times and we'll say it again. We know that the tax base is going to change each and every year. To Barry's earlier point, with trending and the cyclical reassessment or base rates changing, new legislative changes, new allocation areas, right? Those tax bases, they're going to change every single year. And so while those gross and net assessed values, they're determined locally, right? The department tries to be a good partner and assist counties throughout the certification process, and by extension, local units with the prerequisite steps via annexation, TIF pass-through, or TIF neutralization. When the auditor submits net assessed values to the department, there are a couple auto-generated data checks that will appear within the application that, if certain parameters are met, the auditor will then need to respond and provide additional information on. And so to that point, these are the current existing thresholds within the department's application that assess year-over-year changes in both real and personal property. And again, these are the specific thresholds that necessitate answers within the application. An important note on this is within the plus or minus 10% changes within real and personal, increment, and pass-through, right? It doesn't break that down into the granular level of individual bucket types across 1, 2, and 3. It aggregates that at the real and personal property total. So that's why it's so important, even beyond this application, local taxing units, counties being involved in diving deeper into the data and looking at that more granular level, because some of these data checks could mask those underlying issues. Beyond those data checks, a couple other items that the department will review outside of the application include the taxing district linkages, which we will say are in which we call step 2 and step 3 of the application itself. That is to ensure that the tax bases associated with each fund and unit are correct. The next one in there is making sure that a conservancy is not tied to a taxing district. Short answer is that Conservancy's tax base operates on gross assessed value as opposed to net assessed value, so they should actually not be tied to any taxing district. So that's one additional component that we will review during the annual submission process. The next one are annexation values within that are specified within a given taxing district. We will reconcile those with the annexation reports that are provided on an annual basis to ensure that there is an ordinance that backs that up. And again, that drives home the point of just making sure that municipalities, if you believe that you have an annexation that should be applied for a given calendar year, definitely communicate that with your county auditor. And even by all means, contact your field rep and communicate that with them to make sure that is accurately represented in CNAV. And then the last component, just to touch on, is AB withholding, as counties are authorized to withhold up to 2% of assessed value within a given taxing district to account for decreases that may occur between CNAV certification and the generation of tax bills. Of course, if a county would like to go and exceed that 2% threshold, then that does require department approval. So, all right. So now, given all those steps, touching on the submission review, etc., I will hand it over to Anna, who's going to touch on the importance and really the basis of using the CNAV and why it's so important.
We have now talked about how to find the public facing side of the CNAV, and we've talked about the various steps. We'll just reiterate one more time for everybody listening that once the CNAV has been submitted by the auditor, it is public. Any unit of government can, and again, is encouraged to visit the report search website. That is what the main page of our public report side is called, and locate the step 1 and step 3 reports that we referenced earlier. A unit can pull the reports and see if any of the NAVs have gone up, down, held steady, somewhere in between all 3 of those. Changes to the AV base can and will have a wide-ranging effect on a unit's budget, especially if there's a capital development fund, or if there's anything like that. The AV base can affect your budget. So one thing about utilizing the CNAV that everybody needs to pay attention to if they're involved with the Conservancy, and that includes the auditors, is that the public-facing side of Gateway does not publish what we call step 4, which is the Conservancy gross AV amount. So if you are part of a Conservancy or you are an auditor that has a Conservancy within your county, please try to remember to touch base with each other and see if the auditor can get you the report for your gross AV for the next CNAV cycle. It is part of CNAV, but it is not part of the public-facing side because it's not technically the in part. It's not net, it is gross. So conservancies are based on the gross. So they need to have a special step for themselves. So we've talked about it, but it's really, really important to keep pounding on this. The CNAV is the foundational piece in the creation of tax rates for the budget year in question. While you can use the conservative value, oftentimes during the formation of the budget, units will use a conservative amount. I've seen 75, 80, 85 used of the current year AV during the next year's process. You can do that, and that is fine. But when the department begins to work your budget, we will be using those certified net assessed values that the county auditor has submitted. So you can use the conservative, but we will, and we have to, use those actual certified numbers. A good step that you could do is to try to look at least 2 years worth of your CNAV amounts for your unit. You can compare pay 25 to pay 24. This next year, you can compare 26 to 25. And you can possibly begin to identify if something is amiss. So for instance, we'll use a hypothetical. A city may notice a significant increase in their NAV base over the previous year that doesn't appear to be in line with what they think should be happening given the activities within their municipal boundaries. They could reach out to the auditor and may identify that something either changed that they had not thought would change, or if something got missed. We talk about the hypothetical because there's actually a real. So during the 2025 CNAV process, a city did see a pretty substantial increase to their AV. To those outside the county who don't live there, that would be us at the department, the increase was not necessarily outside the scope of reality or possibility because of market factors and other things. However, what actually happened was abatements were granted by the city that were not applied by the county at the time of CNAV. They were applied afterwards. This caused a $70 million decrease in the AV base for this city, which actually did have some serious ramifications for that unit. That city, that town did not compare. They were not able to really see that difference. On the other side, to use a, I guess, more positive example, a school did this type of review. They compared their Pay 25 CNAV to their Pay 24 CNAV, and they noticed a substantial change in AV. They reached out to the county and they found out that TIF pass-through was not notated. It was not part of the actual CNAV when it should have been. It amounted to a decent amount of money that could have been lost if that had not been fixed. The county they did elect to recertify their CNAV, averting a situation that could have been rather detrimental to that school and honestly other units in that same area. So this slide represents two actual examples of what can happen if you decide to or not to check your CNAV against the previous year. So at this point, we are to the question slide. So if there are any questions, we can try to answer them now. Jenny, were there any this time?
We do not have any questions right now, so we'll wait a few minutes. I know that there was a question this morning
Yes.
as it relates to the legislation and the CNAV deadline. And I don't know if you want to share your thoughts on that question that we had this morning.
I will try to start and then Barry will also go. So we are, aware that things could be different in terms of some of the components to the CNAV itself this year. So on the net side of things, we do not anticipate any changes to the actual deadline. So August 1st is still the deadline in statute for CNAV submission and of course TIF neutralization. So we are trying very hard to digest everything that happened during the legislative cycle, and that is still an ongoing process so that we can, if there are any tweaks that need to be made, we can get those out as soon as possible. But in terms of the actual deadline for CNAV, it remains the same.
I'm not aware of any changes or anticipated changes or delays from an assessment perspective. All 92 counties have had their ratio studies approved. Almost all counties were able to get their Form 11 sent out by April 30th. And the only change that I'm aware of that could possibly cause a delay, but I don't think will be, there was a change in the agricultural base rate. And a couple counties had previously, prior to the legislation being passed, had rolled and balanced their real property values. And they, because of the change in the agricultural base rate, they had to go back and re-roll and balance those values. But other than that, I'm not aware of anything that would potentially delay the rolling and balancing by July 1st, which then would lead to the August 1st CNAV submission date.
If there aren't
Thank
any
you.
questions.
Yeah, we got one more
Sorry.
in. Sorry,
Okay.
was on mute by accident. The next question is, when it comes to the plus minus 10% on AVs, why doesn't this go to the assessor since they are the ones who know that?
This is actually an excellent question, and we tend to answer this one every year. So the CNAV itself is actually trying to pinpoint changes in possible net side. There are many times where the net is actually really what changed. For instance, I'm going to use the easiest one by default, which would be supplemental. So sometimes that change on the net side can drastically go up or down in various districts or what have you. So some of these questions are actually on the net side. Now, when it comes to like the gross side of things, that is where we do try to say and stress communication with the assessor. I used to be a county auditor. So when I came to do the CNAV, when it was that time of year, and I would get some of those questions that I knew that might pertain to the assessor, I had already had that conversation when they enrolled to me. Like, are there things that could be different? Are there things that could, that change that? And so we would go over some of those drastic changes that might be because of the growth side, changes in the ag land base, changes in how commercials are going to be looked at, or maybe apartments or various things like that. So that I could then, if that was something that popped up in the plus or minus 10%, I already knew the answer because I had talked to my assessor. So those plus or minus 10%, sometimes the answer we have received is ask the assessor, but then we did digging and it really was on the net side where it had to do with a real property abatement. It had to do with changes that came from deductions or changes in the supplemental. So not to say that's going to be the case every time, because I'm aware it's not. And that's where it's like possibly talking to the assessor side. But unfortunately, the way that our system, I guess, of assessment and whatnot is set up is that the CNAV is where those questions have to be asked, because the CNAV looks at the bucket value, I think, a little bit differently than the assessment side. Now, I could be wrong, but in my experience in talking during the CNAV process with some local assessors, they look at things in a different way than we have to see them during the CNAV. And that is just the nature of the way it works, unfortunately. So working together can be really helpful and trying to get those plus or minus 10% under wraps.
Great. Well, we don't have any more questions. Anna, do you want to go through the field maps real quick? And then
Yeah,
we'll wrap
Barry
it
was
up
just
here?
like, hey, Anna, bring up those maps. So we'll start with the budget field reps because our map is a lot more chaotic. We have some solid sections, but for the most part, we are a patchwork quilt. So if you've got any questions that arise, you can definitely start with your budget field rep. If we cannot answer, we will try our best to find out who you should talk to if it's not something that we can help with. So when we say we are one of your number one contacts, please take that to heart. And so that is our map. That is the link to it. You can always find it on our website. And then here is the assessment one.
And from the assessment side of things, I do want to make one note. Chris Wilkening, who was the Southeast District Assessment Division field rep, he is no longer with the department. We are in the process of hiring a replacement for him. So in the interim, please, if you have any questions, direct them to me. For any of the districts, but especially if it's a Southeast district, this question, please direct those questions to me. That's it, Jenny.
Great. Well, thank you all. And just note that as they both said, Anna has had some new staff that joined the budget team. And so the map, if you haven't already heard from if you have a new rep, if it's changed from a prior year, take a look at that map that's on the website. We did update it just a couple weeks ago with some new county assignments, and we will get the assessment updated once Barry is done with his hiring process for that, replacing Chris, who recently left our agency. So if you have any questions, please feel free to reach out to those individuals. Once again, we will send out an email later this week that will include the PowerPoint, the video, the CE, and the survey form. They will also be on the DLGF website. You can also access the video and subscribe to our YouTube channel, and you'll get notification when that is live. You are welcome to share this information with your coworkers or with other elected officials or other individuals that might find it very helpful to them as they are learning about this process. So we want to thank today our presenters, Barry, Anna, and Sam, who put this all together. This was one of the topics that was very popular the last year. So want to thank them all for joining us today and giving us this great presentation. And we hopefully will see you next month in June. And as I mentioned on the webinar's webpage, we will have a list of those topics that will be for the 10 a.m. session. And then we will have the second list of topics for the 2 p.m. session. So we hope that you can join join us for one or both of those sessions in June. And we look forward to seeing you at a future webinar. Thank you all for joining today.